Welcome back to the channel, friends, here with another video in a new environment. You haven't seen that one before, and now that we moved to our new apartment here in Dubai, well, I also have a new place to film. That's sadly not my office, even though it looks pretty cool, but it's one of the communal rooms that we can be using as part of the complex here. So yeah, I might be filming a couple of those videos over here, and yeah, just like to mix it up and keep it exciting for you to watch as well. But anyhow, today's video I want to talk about, potential investment strategies and what you can invest your hard-earned money in. And a lot of people obviously ask me, Kai, you always talk about ETF investing, but at the same time you also have real estate and also some Bitcoin. So what should I choose? Where should I invest my money in? And I want to focus on especially comparing, ETF investing or stock investing versus real estate, because I think that's something most people feel comfortable with. They understand the concept of both. But then the question is, so what do you spend your money in? Either into ETFs or real estate, maybe both. And I want to share with you a couple of my thoughts about those two different investment classes, the pros and cons, and ultimately, obviously, give you my opinion and potential recommendation for you, which might be the better way to go about it. Now, first of all, when we talk about real estate, here I really talk about real estate as an investment, not for yourself as a property to live in, because obviously that's hard to compare, right? Because the ETF is not for personal use or stock, but it's an investment vehicle, and the same should be if you want to compare, apples to apples for the real estate as well, right? So if you want to buy real estate for your own personal use because you don't want to pay rent anymore, or you just want to have your own home, that's totally fine. But I think that way you shouldn't really compare it to anything else, because that you do because you want to do it, because you want to have it for personal reasons, which is totally fine. I totally get it. I think it's nice to have your own place that you can live in. If anything else fails, the market's collapsed, at least you have your own place to stay. I think that makes perfect sense, right? So if that's your train of thought, then absolutely go for it. And sometimes even the numbers don't make sense, but it's your own place, and I'm totally for it. If you can afford it, then definitely go for it. But as I said, in this video, I want to talk about real estate as an investment. Same what I did actually in Dubai, where I bought a couple of years ago 2 properties and I've been renting them out, and yeah, they've been really successful for me. Let's talk about the benefits that each of those gives you, and then we talk about the cons that each of those potentially could have. Now let's start off with ETF investing, and here the first pro for me is really the biggest appeal actually. It's the passive nature of it, right? You're basically gonna have an ETF provider that manages the entire ETF on your behalf on whatever criteria you set it out to be. You can have an AI-based ETF, you can have a new technology ETF, you can have so many different themes and topics your ETF is around, or like I do myself, invest into S&P 500 ETF, which are the 500 biggest companies in the United States. You could also have a global world ETF, so many different options. I made other videos about this, so that's not the topic of this video, but essentially you're gonna have that provider manage all the various stocks that are part of the ETF inside of it for you, so you don't have to spend your time wondering which stocks to buy and sell. Is Nvidia going up or not? Even if it drops a little bit and goes outside the top 10, there's nothing for you to worry, because there will be another top 1 company in there, and it's all done for you at a very little fee. I pay 0.03%, so it's really set it and forget it. You choose a broker that you like. I have a couple of them I shared in my channel, obviously. You find them in the description down below as well, the ones that I use. You can even automate your investments, lean back, and your money just grows over time. So that's the biggest appeal potentially for an ETF investing, and also the risk is rather low. Of course, depending on which ETF you choose, but as I said, S&P 500 historically over the last 30-40 years returned anywhere from 8 to 10%, so you're going to be in good hands with that long term. So on top of the capital appreciation, which is basically the higher price, you buy the ETF at lower price, over the years it increases in price, so when you sell it, you get more value than you bought it for, right? That's the whole point, similar like a house, right? So that's very similar in that way. The second point of an ETF, depending on which you buy, you might even get a dividend paid to you. And again, that depends on which kind of ETF you buy. For example, the S&P 500 has a very low dividend, so I really wouldn't call it dividend investing. I get around 1.2%. So unless you really have a huge portfolio, that dividend won't make a big difference. But there are even dividend-focused ETFs that mostly buy dividend-paying stocks in that ETF, and so you can get really some nice dividend income if you wanted to. Now, again, I made some videos about why I like total returns more than just focusing on dividends, but if that's important to you, then that could be a great option as well. And another really good point, what I like about ETF investing is that you can get started from as little as €1. Literally, most brokers, you can buy a dividend share worth €1 and get started. And it's so easy to get started investing, right? Which obviously we'll come to this in a second with real estate, but that's very difficult. You need way more money to to get started. So I think that's a really easy way to start your investing journey. So for anyone who wants to get started, I think ETFs are an amazing way. Of course, shares as well, but once again, you have to pick which share to buy and so forth. So you can easily get started with ETF investing, very little money. And another huge benefit for me is the liquidity. If you don't want to have those ETFs anymore, or you really need the money for whatever reason, right? You have an emergency and you don't have cash at hand, but you invested in an ETF for a while. Well, worst case, you can liquidate it. You can just sell it, unless it's a Sunday evening, but wait until Monday morning, the stock market's open, and you can sell your ETF and have some money right away that is available. Once again, with the houses, we'll come to this in a moment, but it's much more illiquid, meaning you can't just sell your house to the next day, right? And if you did, well, it would be at a huge discount. So usually it's a much longer process. So that's another big benefit why I think ETF investing really appeals to so many people. Now, talking about some of the cons of ETF investing, well, honestly, I can't really think of too many, right? Because I really think it's one of the easiest and best ways to get started investing. Now, obviously, you might want to diversify and have some other investments, right? That's why we talk about other investment classes as well. Potentially, some of the negative parts might be taxation. Maybe in the country where you are a resident, a tax resident, your country may not be so favorable towards stocks, ETFs, and dividends, especially dividends sometimes can be taxed very high. So it may not be attractive for you to invest into dividend-paying ETFs or shares, individual stocks. So you have to check what works for you. But if a country really punishes ETF and stock investing tax-wise, then usually they will do the same for real estate. I don't know too many countries that really favor real estate much more than ETFs and stocks. Now, the second potential negative I could think of is that maybe the returns that especially younger investors expect may not be that high, right? Because usually when we invest into ETFs, these are more solid, stable companies. Once again, there are different ETFs out there, right? You could have really tech-heavy ETFs. So I'm generalizing now, obviously, but if you invest into S&P 500, the year-on-year returns are going to be anywhere between 8 to 10%, which for young people may not sound very exciting because, if you invest 100 euros a month, right, 10% on that is really not so exciting. I get it. But you obviously have to think long-term, invest over the years, and you start seeing compounding results. That's the benefit and beauty of it. And also, again, for me, a benefit that I know it's less volatile. It doesn't go up and down like crazy. So if, like I mentioned earlier, I really need that emergency cash, well, I know my money is not going to go down by 60% overnight, right? It's fairly stable. So that's, in a way, a drawback, but also a benefit in my eyes. With this, let's move to real estate investing. And here, you have obviously a number of benefits. The first one, once again, similar to ETF investing, is the capital appreciation, which hopefully will happen if you buy the right property in the right location. And there's so many different types of real estate. Obviously, you can buy commercial real estate, you can buy just land, wait for it, appreciate, sell later on. You could buy apartments, condos, timeshares, so many different ways. So I'm really talking in generic terms right now to get the concept, but basically the same idea that you buy it at a lower price, wait a few years, or even a couple of months, depending on which market you buy it in, and sell it at a higher price. So that capital appreciation is your gain as an investor, and that's one of the big appeals of real estate, obviously, right? Same way how I bought my property over here in Dubai. When I bought it, a couple of years ago, it was significantly cheaper than it is today. So here I made a profit as an investor once I sell it. The second benefit of real estate is the cash flow component, which is similar to a dividend, a company that pays you regular income, right, in the form of dividends. Here for real estate, basically you get the income in the form of rent, right? Either if it's commercial, then the company is paying you the rent, or if it's a private rented out apartment, then you get the rent paid to you by the tenant, or if you have a company, whoever it is, but basically the rent income, which is regularly. Now, in my case in Dubai, I get it on an annual basis because they pay 12 months in advance, which is really amazing. I know the tenant is going to stay for 12 months, and I have a pile of cash that I can sit on and then think of what I'll do with it, reinvest, or even keep in my bank account where I get now 5% interest, which is amazing. So technically, I get even more rent than if I would just get it chopped up every single month. So that's amazing. But again, depends on where you buy and so forth. But I think that's a real nice component of having that regular cash flow, because sometimes when you invest in the S&P 500, it's great to see your money grow over time. But actually, unless you sell it, you can't really live off it. As I said, I get 1.1% dividend. That's really very little actually. But the rent is actually quite a big component. Technically, I'm getting around 8.5 to 9% yield, basically similar as a dividend, but from my investment in the form of rent. And I think that's really attractive and appeals to a lot of investors. Now, of course, also once again, depending on which country you're living in, there might be some nice taxation benefits for you. Because in some countries, for example, you could write off the interest that you pay for your mortgage, which is currently extremely high because interest rates are so high, so you could tax deduct it. So versus your tax bill that you get at the end of the year, the interest that you pay towards it could be written off. So again, it depends where you live. Luckily in the UAE, we don't have taxes on personal income tax and so forth, so it's not applicable, but anywhere else, you can really get some great benefits out of real estate investments. And later on, you could also use that real estate as a security to buy another piece of real estate. That's how people really started growing and compounding the growth in real estate, because once you have paid off a real estate apartment, or even at least partially, you could use that as a security to give for the bank to get yet another mortgage on another bank, and then the tenant pays you the mortgage basically, ideally even more than the mortgage is, so you positively cash flow and you make money on that, and then you can start adding more and more properties to your portfolio. So that's how people really start growing, significantly. In the beginning, it's very slow, but once you have a couple of properties, the growth, like anything in life, right, compounding starts kicking in and can be really beneficial for you. Now, obviously, there will be way more benefits for real estate investing as well, as there probably will be for ETF investing as well. But I just want to touch on the most obvious and biggest ones. But at the same time, there are also obviously some significant drawbacks, in my eyes at least. And the biggest one will be the required cash amount that you need, at least to get your first down payment, right? Unless you're sitting on millions and can buy a property outright, most people, you're gonna have some kind of financing from the bank. They're gonna give you a mortgage, right? So you basically pay 10%, 15%, 20%. In the UAE, for example, it's even up to 40% of your own money. You give it to the bank, and only then they will finance the rest. So again, it depends on where you live, but you're probably gonna need some help from the bank. So here, you need a lot of money in the beginning to even get a mortgage in the first place. You're gonna need some other security because they're gonna look at your job. Then also, of course, you have the financing, right? The interest payments. Right now, we bought another property with my wife in Lithuania, and we've been only paying the first few months only the interest, which is crazy. So basically, we're not paying back the mortgage itself, the principal. It's only the interest in the beginning, and only the last few years of the mortgage, which is a 30-year mortgage, do you start really paying back the mortgage principal itself. So in the beginning, you only pay the interest to the bank. So these are all things to consider. And talking about cost, all the other costs around it, right? You're gonna have a notary. You're gonna pay some land fees. Even in Dubai, I had some land department registration fees. I probably have an agency that manages the building for you, finds the tenant. So there's so many other costs around. If something needs to be fixed, repaired, usually it comes back to you as a tenant. Even now, for me, as a landlord here, I have to pay annual service charge for the developer and operator of the building. So there's a lot of charges around my investments that, of course, still in my eyes makes it profitable, but things you really need to consider beforehand, and those can increase over time, which once again in the ETF investing, I pay 0.03% and that's it, right? That's the fee I pay to the ETF provider to manage all those companies on my behalf. So much more attractive in that way in my eyes. And of course, coming back to the point of liquidity and how quickly you can liquidate something if you need it, right? If tomorrow I needed a lot of money for whatever reason, right? Maybe I found a great investment, I want to start a business, or it's an emergency, whatever it is. If all my money was tied up in my real estate, then obviously it would be very difficult to get money out of that, right? I would have to put it on the market, wait for offers, get the sale done. These things take time. Once again, fees, right, for all the notary and all the people involved. Until I have my money in my bank account, it can take weeks, ideally, sometimes up to months to really have the money. And that's really painful if you want to have flexibility and liquid money. Plus, of course, the fact that it's very immobile, right? If I'm moving location, now maybe I'm in Dubai, as I'm filming it right now, my property is nearby. Worst case, I could go there, do something. If I go to another country and the tenants would need some help, well, I wouldn't be there, right? So once again, I need an agency to manage it for me, which costs money, which goes out of my return. So all these things are points of consideration. And also, once again, that I can't just move around my property. Obviously, it's fixed here. If, God forbid, something was to happen in this region and people were scared and running away, well, guess what? The property value would go down big time, and I can't just sell it, right? I would sell it at a huge loss. So you always depend on the location, on the political climate, on the security situation where you're in, and it makes it much less mobile. Once again, with my ETF investments, if I start seeing the US going down, well, I would just sell all of that. Maybe I take a little hit, but then I could just rebuy in another market. Let's say I see China as a huge potential. Well, guess what? I can just quickly sell through my broker all my shares over there and buy new shares and ETFs over there. And it's just so much faster. Of course, the same with Bitcoin, right? It's much more mobile and flexible, and that's what I really love about it. And that's potentially a big drawback of real estate as well. And of course, another big point to consider is that real estate needs regular maintenance, right? Even right now, I'm getting really good rents on my apartment. But guess what? In 8, 10, latest 12 years, it's going to be a bit run down, right? And in Dubai, a 10-year-old apartment, well, it's not that attractive anymore because they're building really crazy new towers all the time. So I think eventually, you have to think, are you going to sell it and, still kind of cash in that premium that you get in terms of real estate investment? Or after 15 years, let's say, are you going to take some of the money that you earned and reinvest it to beautify it to get potentially even higher rents in the future? So that's also something to consider in terms of real estate investment. So you see a lot of pros and cons for both, and probably, as I said, there are way more that I haven't even mentioned, but just to keep it kind of brief and to the point. So ultimately the question, what should you be doing? Well, it's very easy. As always, it depends. I'm sorry to tell you, but if there was one right way to invest, everybody would be doing it, but obviously there aren't, right? Some people say real estate is the best way, that's how you grow your wealth, and you should do that, and they have been doing that and have been successful, and I'm really happy for them. Other people swear by being light, flexible, mobile, and only invested into ETFs or only Bitcoin, right? So you see, there's no right or wrong. I hope those points show you what are the pros and cons, and you can see what works with you, right? I'm a person who likes to be flexible. I lived in many different countries, move around, but I also believe in diversification. I will never put all my eggs, all my money in one basket and say that's the best way to invest. And that's why I personally diversify into 3 things. Right now, into the ETF, S&P 500, I have some Bitcoin holding, and of course, my real estate here in Dubai and soon in Lithuania as well. And that way I can really feel I benefit from all the various investment strengths that each of those asset classes offers me. Now, if I was just starting off as a student or starting my career or first time investing, then obviously I would probably not go into real estate because I think it's a much bigger commitment. You would have to save up quite a lot of money to really get into it. You have to know where to buy. So a lot of things to consider. So if you're just starting to invest, wanting to place your first investment, then honestly, I think it's hard to really beat an ETF investment, S&P 500 or any big index that you want to invest in, and that way you get started. And what you can do later on, obviously once that investment grew into a bigger size over the years, you save up money, put some money aside, put some money into those investments, it starts compounding and growing, and maybe 10 years later, use maybe either all of it or at least some of it, and then use that as a down payment for a potential real estate investment if you wanted to, because don't forget, you still need to save up, right? And the worst thing, if you take that money that you want to save for the mortgage, for the down payment, for the apartment or house, whatever you're buying, and you just keep it at your bank account at 0% interest, you're actually losing money to inflation. So that'd be the worst thing you can do. So I think a much smarter way is to put it, some of it, obviously you want to have an emergency fund, 3 to 6 months in cash, put it in a high yielding saving account. I get, anywhere from 3 to 5% on my cash sitting in my bank account, and the rest put it into an ETF that's stable, that doesn't fluctuate too much. Obviously there's times when it's down a little bit, right? So you don't want to be in a situation when the market is down. In a bear market, we're down 30% and you need the money right then, right there, right? So you want to still be smart with your investments, but I think it's a good way to really maximize your money, let it grow, and then later on you can see, maybe you will just continue investing into the S&P 500 or another ETF, or you're ready to buy your first real estate, and then you can use some of those funds and use it as a down payment. So as you see, there's no right or wrong, but I hope those points gave you a little bit of an idea of what you could be doing with your money. I believe in diversification. I really think in the long term, ETFs and real estate should be part of any serious investors, but ultimately it's your choice, your money, but hopefully it was helpful for you. And if you did enjoy the video, then please give it a like. It helps the video to be seen by more people. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.